Alrighty, so I'm going to be giving a quick technical analysis of NIO stock, another electric car company, similar to Workhorse. I gave that breakdown earlier, Nikola and Tesla. So basically, we're going to be talking about NIO, possible scenarios, which is likely what you should do if you're in it. If you're not in it, should you buy, hold, sell? Some key levels to watch out for, how it reacts with those key levels. So let's get into the breakdown. This will be for July 7th. So NIO, another electric car company, they had some news or something that sales was better than expected, but who cares about the news? We work on technicals, and that gives us a much better insight than any news can ever give. Because look, we had this consolidation range right here, and we just had a nice push up, some sideways digestion. Remember, stocks can't go up forever like some of you guys think. That's okay. So stocks need to go sideways or have a pullback before they can resume the uptrend. NIO decided to go sideways. Look, we closed one day right above that high, fat gap up, hammer candle, and then continuation, fat gap up. We talked about gaps the other day about SPY. That's where the buyers and sellers met overnight, and the opening print posted much, much higher. And so basically, this chart looks similar to Nikola to Workhorse and Nikola. And so Workhorse, we're trying to decide, is Workhorse ahead of NIO, or is it foreshadowing NIO, or is there no correlation? Or is it going to be something bloody like Nikola? I called out that bear flag last week, and this is textbook. Increasing volume, increasing fat red candles to the downside. So this is not what you want to see if you're in it, obviously. That's why we have stop losses. If you know technical analysis, you should have been out of NKLA at $65. You should have been out at 62. Certainly should have been out below 60. So this shows the cost of bag holding. You can get really wrecked if you don't know what you're doing. So be sure to pay attention. But Nikola, chart looks similar to it. NIO, chart looks similar to Workhorse and Tesla. So based on if Workhorse is a foreshadow, the most likely scenario for Workhorse is an equilibrium. So we made a higher low. I'm actually pretty impressed with this pull down and then hammer candle. Buyers stepped up. This at one point was a red candle. But buyers stepped up and pushed it up. So that's very bullish. And we'll talk about a little bit more about Workhorse later. But for the NIO scenarios, let's take a look. So basically, we were trading this intraday, and we noticed this hammer candle right here. Okay, NIO was red on the day. Then buyers bought it up and pushed it up. You had a first buy point over 1160, and that's where I got my starter position. But then we saw NIO aggressively pushing up, and I was watching this 1230 level because that was the Monday's high. So if we can take out the previous day's high, every short seller that's shorted is underwater. They've got to give up. They have to buy to cover. And buyers see that, breakout momentum traders. This certainly is a momentum name. So if we go back to the 1 minute chart, notice what happened once we broke out from 1230. We broke out from 1230. This is textbook. Came back to 1230, basically to the penny. We had a little stick save, but I mean, as long as the candles close inside 5 minutes above, not every price point is going to be this precise, but was this nice. So we added over here. We got some in-out spreads. We got some debit spreads. Very low risk, $25, $50 risk. Nothing crazy. And look, we just got a huge push. And where was the high of the day? Pretty much at its IPO all-time high at 13.8. So that's an important level because that level, and if it can get taken out, so if we gap up tomorrow, there is no resistance. The sky is the limit. So if we gap up to all-time high, sky is the limit. However, even if we do gap up, there's a such thing called an exhaustion gap. Look how many gaps we've had. One gap, huge gap. This is a 10% gap, 14% gap. No gap today, but still had a really huge green day of, 14%, but from the lows, we're really up 30%. So be careful. Exhaustion gaps means it just keeps on going up. It's tired. Give it a chance to pull back. It's very risky to be buying the highs and swing trading up here. So if you're going to do it, you better know the risks and you better have low risk when you're doing that. Okay? So if we have no gaps, say we don't gap up, we don't gap down, we want NEO to kind of stay in this range. And that's kind of what it's looking like, at least in the after hours trade. We want NEO, if it doesn't gap, we want it to stay in this range. 1230 is the most important recent range. We want that level to keep holding if you're in it and you want it to keep running. So watch the 1230 level. If we start closing even a minute, 5 minutes, certainly an hour below it, don't be surprised if we come back down to 1070, which is a 12% drop. So be sure to manage your risk. If you can't afford a 12% drop, don't be in it. So basically, and so if we gap down, certainly if we gap below 1230, NEO's going to probably dump, because think of how many longs are trapped from up here. So at 1230, watch that level. If we're below it tomorrow, we can flush. If we're above it or in between, that's okay, as long as 1230 holds. And then watch that all-time high breakout level, being mindful of the exhaustion gap. Okay, so medium term, if we look at the 180-day 4-hour chart, NEO is still in an uptrend. So this is for shares. If you're not trading options and you want to probably bag hold your shares all the way to eternity, or your investor, I bought like 2 or 3 shares of NEO today. Just 2 or 3. Doesn't have to be hundreds or 200s or 300s. A little goes a long way if you're willing to actually invest. But NEO still in an uptrend as long as it's above $5.63. So watch that level, 563, if you're an investor. Yeah, if you're in NEO, enjoy the ride, but be sure to manage risk. If you're not in NEO, you can enter at these gaps. Gaps are support. So if you want to dip buy, you can set an alert at 9:55. And there should be at least an intraday bounce, probably good for at least 20 cents, 30 cents, 40 cents, which, depending on how you leverage up your position, can be a pretty big win if you're just patient and wait for the dip buy right at the gap. There's another gap at $8, another gap at $4.75, but $4.75, at that point, we might not be in an uptrend anymore, because remember, we talked about that 573 level. Okay, so quick notes on Workhorse. If you're in something like Workhorse, you want it to get above this gap, this 1725, 1750 area. You want it to get above this gap ASAP. If we are every hour that we're below, so hour meaning go to the hourly chart, look at the hourly candles. This is an hour below it. These are all hours below it. The longer we're below this gap, the less likely it might not be to get filled, and we could dump. And I don't think it might stop at 12. It might stop at 10. So be sure to manage your risk. And if you're in something like Workhorse, get ready to see some blood if it can't get above that 1725 area ASAP. ASAP. Okay? Nikola, we talked about that. Nikola, in my opinion, might already be dead. Nikola, we might see a dead cat bounce, maybe to $50 a share at most. Nikola is probably dead for a long time. I expect something like a trickle off. If you really want to buy Nikola, your buy price is about $36 a share, right in this gap area, $35 a share. So you can watch out for that gap, but with bear flags, sometimes moves that are this strong can die pretty quickly. So Nikola, all the dead. So Nikola is already dead, in my opinion. Will the Grim Reaper catch Workhorse, NEO, or Tesla? That's basically what we need to keep an eye out for. Watch those in key levels: 1230 for Nikola or for NEO, and 1380. Otherwise, if it's not in that, it's actually really healthy and really good to stay in a consolidation range so it can catch its breath and then move, just like we did here. This would be something beautiful. Let it bounce between the support and the resistance for a while. Of course, if you have naked options, you're at risk for catching that theta decay, But that's why we trade in-out spreads. In-out spreads will not catch this decay, especially if you're in an in-out spread from 1150. So keep an eye out for that. We'd love for it to consolidate, then break out, just like we did here. Consolidate, breakout. So that's all I have. Let me know if you have any questions or comments. Be very careful. Do not over leverage in these names. A little bit goes a very long way. You don't have to risk your life savings on this because I don't want you to get burned. If you get some good profits, great. Enjoy it, you know. Treat yourself, withdraw it, put it in your bank account, save your money. And yeah, that's it. Thank you very much. See ya. Oh,